Let's get to Rafferty Holdings Chief Financial Strategist Dick Bove right now as we walk through these numbers. Dick, your reaction. Good morning to you.
Good morning, Maria. Well, basically, every quarter, JPMorgan beats the number, and it beats the number because either its tax policies are different, its loan loss policies are different, et cetera, et cetera. So the stock tends to go up immediately when the big number is reported, and then it tends to ease off during the day as people get a closer look at the underlying numbers. And what you're looking for in the underlying numbers is, again, what you've been mentioning all morning, which is loan volume. Yep. Has loan volume been particularly good or weak? My guess is loan volume is up somewhere around 3 to 4%, which would be year over year, which would be a reasonable number for the company. The other thing you're going to have to look at is the net interest margin, because 3 of the 4 banks which are reporting today actually have down net interest margins since the Fed started increasing interest rates. And what you worry about here is, will deposit growth slow down in the banking industry because banks are paying their customers like greater fools? In other words, they're refusing to give them some of the profit that they're getting because there's been a 2% increase in the Fed funds rate since the fourth quarter of 2015. And the last number that you really want to take a close look at is something called their other comprehensive income, because as interest rates go up, the value of bank assets go down. And in the last 12 months, at least to the second quarter numbers, the value of these securities that the banks hold, and they own $3.6 trillion worth, has dropped $54 billion. So, it really requires a lot of work to come up with how good or bad the quarter was. In the statement, the CEO, Jamie Dimon, says that the U.S. economy continues to show strength despite the geopolitical uncertainties. Those uncertainties, however, may have a negative impact on the economy at some point. Robert Wolf.
Yeah, I thought, Dick, what you said was interesting. You said that the net interest margin has been lower for 3 of the 4 banks, and it seemed like on loan growth, prospectively looking, that you were nervous about that going into 19 as well. How do you match those 2 up?
Well, and the first thing is that the loan growth numbers that the Fed puts out shows that there are 2 areas which are really hot. One would be credit card lending, and another would be actually a recovery in multifamily lending. The commercial and industrial lending, loans to businesses, that's reasonable, but it has been weakening for the last 3 or 4 months. Mortgage loans are not increasing particularly strongly. So I think you're going to get mediocre results in terms of, the increase in loan volume. The net interest margin is a big issue because basically the Fed funds rate was up 184 basis points effectively from the fourth quarter of 2015 to the second quarter of 2018. And the net interest margin of the banking industry overall was only up 26 basis points. And as I say, Wells Fargo, PNC, Citigroup all had decreases in their net interest margin. And what that tells you is that there's more than just the Fed funds that come into the operating, if you will, structure of a bank, which affects that net interest margin. I don't think that the net interest margin over the next 12 months is going to go up. If interest rates go higher, I think it's going to go down. And the reason is because they're going to have to pay more for deposits.
Hey, Dick, it's Mike Murphy. So I know these numbers are just hot off the press, but do you see anything just in a quick glance here that is a big market mover one way or the other on JPMorgan?
Well, I don't have the numbers, so I can't respond directly. But the answer to your question is, if the company is showing a significant increase in loan volume, that's a market mover, because all other banks would follow in that vein. If they show a big increase, if you will, in any part of the capital markets business, notably investment banking, that's a market mover. I don't know whether they show that or not, but those are the 2 things that would move the market higher.
Yeah, I mean, quarterly net interest income was $14.1 billion. That was up 7%. Quarterly tangible book value per share, 55.68. That's up 3%. You've got quarterly average core loans, ex-CIB, up 6%. Quarterly end ROTCE, 17% versus 17% reported. And the revenue of $27.3 billion. Managed revenue was $27.8 billion. Dick, which one do you go with? The overall revenue of $27.3 billion or managed revenue of $27.8 billion?
Well, the $27.3 billion, because the managed revenue reflects, credit card revenue, which is not on the books of the bank. So, if it's not on the books of the banks, I would prefer to go with what is on the books.
Well, then revenue's a little light. Then if you're going with 27.3, revenue's light on the estimates.
Yeah, I would assume that the revenue light is, if you take a look at the investment banking line, I'm assuming that was light. I would assume that trading was down in the fixed income area, and that trading on common equity, that was probably pretty good. But I think investment banking numbers are probably a little bit weak, and that's probably where you're getting the weakness in the overall number.
Hey,
because
Dick.
Then it's just, yes, sir.
Yeah, it's Robert again. Maria just mentioned that core loans, ex-investment banking's up 6% year on year. That's
very good.
That is very good. That's what I would have thought.
And the consumer business, they're saying the consumer business helped overcome weaker trading revenue.
Yeah, basically, the consumers have been out there spending like crazy from at least the bank perspective. In other words, credit card loans are up, for the industry, 8% year over year. That's very strong, and they had been up 9.5% a few months ago.
Does the sell-off in stocks hurt that? Any thoughts on this sell-off in stocks this week and that impact? Real quick, Dick, we got to jump.
Yeah, no, I don't think the sell-off in stocks hurts the earnings of JPMorgan. No, I don't believe that.
Dick, it's good to see you this morning. Thanks so much for walking through these numbers with us.